Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning. Ladies and gentlemen, distinguished shareholders, hopefully current shareholders and current shareholders and future shareholders, hopefully industry partners, colleagues and friends. Welcome to Abu Dhabi. Welcome to Abu Dhabi Finance Week. And it's my honor to be standing before you to share with you quick insight about ADNOC distribution. This year, we celebrated 52 years since our inception, half a century marked with innovation, growth, value creation, and reward to our shareholders. If you live in Abu Dhabi or in the UAE, and you know ADNOC, we are the one company of ADNOC group of companies that you interact with every day. We have the privilege to serve you when you pass by our destinations for fueling, charging, re-energizing with our coffee, to car wash, and much more. So that privilege of serving you, we are coming from an industry of service providing, and we are privileged to be able to serve you every day. We have a leading position in this sector in this country. We have a 60% market share, and today we operate in the UAE, in the Kingdom of Saudi Arabia, and Egypt, serving millions every day. This company is built on that legacy, a legacy that have allowed us to evolve over the years. And today we are proudly the number one fuel retailer in the UAE. We are the number one homegrown specialty coffee provider in the UAE. We are the number one lubricant lube oil brand in the UAE. And we are the largest, third largest company listed in our sector globally, with a market cap that is close to 13 billion US dollars. We have grown and evolved since the IPO. We were the first company to be listed by the group of ADNOC group of companies, and we have more than doubled our financial performance. Today, we are standing at a $1 billion EBITDA company, 70% growth since the IPO. Today, as a company, we have distributed dividends north of 5 billion US dollars, and we are enjoying an industry-leading margins that are second to none, thanks to the strong backing from ADNOC, the anchor shareholders of ADNOC Distribution. Our momentum is growing. We have clear strategy of growth. We have disciplined growth strategy. We have allocated 250 to 300 million US dollars of capex for organic growth in the UAE, Kingdom of Saudi Arabia, and Egypt. And we have the balance sheet and capabilities to fund inorganic growth through acquisition north of 2 billion US dollars. So we have the horsepower to continue to fuel growth. What we are consumed with and focused on is smart growth, growth that will bring value back to our shareholders, will allow us to sustain our dividend policy and continue to reward our shareholders. We are also future-proofing of the business. We are very focused on growing the non-fuel side of the business. We are definitely the leading company when it comes to the fuel, but the non-fuel side of the business is something that we are constantly evolving and re-innovating ourselves. We have a target to grow the non-fuel business, and we have been doing so over the last at least 18 months, double-digit growth, 15% growth in the NFR side of the business. This is done by re-innovating our car wash fleet. This is done by reimagining the convenience store. We've recently rebranded Oasis by ADNOC, providing a value proposition that we are proudly take pride in serving the customers with. And we're also establishing new partnerships with the likes of Noon and Landmark and QSRs, international names such as Starbucks and McDonald's and Burger King, doing franchising business ourselves, creating more value and monetizing our land bank to create value and future-proof the business beyond the fuel business. We're also looking into the future. We've heard recently, and the previous speaker was here talking about the energy transition, and we are also not far from that. We are looking at the future forms of mobility, sustainable mobilities. EV is evolving and evolving very fast, and we stand ready to capitalize on this business model. We believe that through our network, particularly in the UAE, particularly on main highways, on the way to Dubai, on the way to the Northern Emirates, we have full coverage on those E11, 311, and 611. You're familiar with the key highways of the United Arab Emirates, providing EV car owners with a destination where they can safely plan their journey and avail the chance to recharge their cars within 20 minutes. We have an aspiration to roll out, and we are on track to roll out 500 to 700 charging points by 2030. So future-proofing the business is very important. Our momentum has built up, and we've recently announced new sets of targets that are driving actually an acceleration in our share price. We have now full confidence that our smart growth strategy is yielding results, and our new targets, we've upped the number of target stations by 2028 from 1,000 stations to 1,150 stations that will be erecting, and we have full confidence in our business development capabilities, our know-how in executing those projects within CapEx and within the right locations. We are very much concerned about finding the right location, so that we remain relevant to our customers. We are also upped our target when it comes to non-fuel side of the business. We want now to double the number of transactions coming from the non-fuel business from the 2023 mark. We are going to continue also to grow a new concept. We've recently launched a concept called The Hub. The Hub is reimagining the future, is something that is new in this region, and I think globally, we would say it's also a landmark. It's 3 times the size of the sites we normally developed. Our aim is to develop 30 sites by 2030, and that will contribute nearly $30 million into our bottom line. This is a target that we have full confidence in delivering. We also updated our dividend policy. We are committing to continue to distribute $700 million of dividend to our shareholders as a floor, or 75% of our net income, whichever is higher. And we've extended the dividend policy until 2030. This is a testament in our confidence in value creation, in our execution capability. Colleagues, I think I'm running out of time. The story of ADX distribution, the story of
Thank you for joining us at the Abu Dhabi Finance Week. I'm Rauf Rahman, CFO at ADNOC Logistics and Services, a company that has rapidly transformed into a global leader in energy maritime logistics, delivering consistent value and growth. Our journey began in 2016 when ADNOC merged 3 of its legacy subsidiaries, named Abu Dhabi National Tanker Company at NATCO, ISNA, the Petroleum Services and Offshore Logistics Company, and Irshad, the Abu Dhabi Ports Operating Company, to forming ADNOC Logistics and Services, a unique platform which unlocked significant operational efficiencies and synergies for ADNOC as a group and for the company as well. Now, what we did after that is we worked on enhancing our logistics capabilities. We entered new markets internationally. We secured long-term contracts with industry leaders like Borouge, ADNOC Offshore, and ADNOC Onshore. Further on, what we did from 2017 to 2020 is we entered into a JV with Wanhua Chemicals Group based in Singapore, where they wanted 6 VLGCs to be owned and operated by the JV. Now, this, underpinned by a long-term contract of 10 years, was the initial agreement with them, which ever since then has grown into 19 vessels, with each vessel being 20 years long-term contracted to Wanhua Chemicals. Further on, we went on to acquire Zakir Marine International, a jackup barge operator which today stands as the largest jack-up barge fleet owner on the globe. Then in 2025 is when we acquired Navigate, the largest private vessel pool operator at that point of time, and the largest back-to-back bunker trader. All this enhanced our asset base and future-proofed our business in ways which I have already mentioned about. Now, our financial trajectory speaks for itself. Since 2017, we have grown our revenues by a CAGR of 21% from $900 million in 2017 to $3.55 billion in 2024. Our 2023 IPO was a big success, 168 times oversubscribed. Plus, in 2023 itself, our share prices doubled, a testament to strong market confidence in our strategy and execution. Today, ADNOC L&S owns 340 vessels and jack-up barges. We control, or rather we charter in 600 odd vessels on an annual basis. Yep, we serve 100 customers in over 50 plus countries, yet through our 19 offices in various cities across the globe. The services we provide are very diverse in the sense we operate integrated logistics for both oil and gas, both onshore and offshore. Then we go on to, we transport crude oil and all its derivatives. We ship LNG, LPG, ethane with our fleet of vessels. We operate petroleum ports. Like we said, are the largest back-to-back bunker trader on the globe. We are a leading beneficiary of ADNOC's strategy and growth, with forward contracted revenues of about $25 billion, of which $20 billion is from ADNOC Group alone. We have a strong EBITDA outlook. We expect to grow our EBITDA at a 9% CAGR through to 2029. We were added to the MSCI index last month, and all analysts who track us rate ADNOC L&S a strong buy. Our free float has increased to 22%, and the average traded volumes have more than tripled from last year as of now. So if we ask, why invest in ADNOC Logistics and Services? What we offer is a proven track record of consistent revenue and EBITDA growth underpinned by long-term contracts and a diversified portfolio of services which we offer. A global reach, which we have already mentioned, strategic partnerships with NOCs, IOCs, and global trading giants like Glencore and Vitol. We have a huge growth pipeline, as we already discussed, something around $25 billion in forward contracted revenues. Yeah, a strong governance and market recognition, testified by MSCI inclusion. Yeah, and a commitment to sustainability, a commitment to in-country value, a commitment to local development, supporting the UAE, plus a net zero ambition, which no other shipping company or logistics company has announced as of now. So we expect to be net zero by 2045. So in summary, ADNOC Logistics and Services offers investors a unique opportunity to participate in the growth of a global logistics leader, yeah, which combines scale, resilience, and innovation, which further future-proofs our growth. Thank you all for your attention, and we look forward to discussing with you how you can be part of our journey. Thank you very much.
Hi, everyone. Good morning. Thank you for having me here. It'd be great. My moment here, before the orchestra sings me off, is to talk about Fertiglobe, to introduce you or update you, depending on your level of awareness for us. So we are the largest seaborne ammonia and urea exporter globally. You can see this here. And this time last year, ADNOC purchased a majority stake in us because they recognized our value as of now and our future growth potential. I'd like to take you through some of those elements. So obviously being the largest seaborne ammonia exporter globally is a massive advantage. Bulk size is massive in the industry that we're doing. But also, in terms of food security, we've got a major contribution to global food security. Our world population is forecast to grow by 11% to 2040. More people are also needed to be fed in the same area. And also with climate change, that is putting even more pressure on food. Without our product, the following year, if it is not applied, you have a 40% reduction in your harvest yield. Basically, our products are essentially keeping alive over sort of 4 billion of the population we have at the moment. So global food security is incredibly important. And obviously one of those inelastic components which keeps on growing and growing. And what about Fertiglobe? Well, we're not only the largest exporter, we've also got some of the youngest assets in the industry. And I think ADNOC was particularly interested in our location. We're here at the crossroads of Europe, Africa, and Asia, where you particularly see that growth. We've got advantage freight rates, which make us highly competitive against some of our competitors. Through our North Africa bases, we have no Suez Canal charges. We have no import duty into Europe, which is one of the sort of strongest markets that for these products. And we actually, from this position, are able to serve 44 countries from this freight advantage locations. Not only that, 70% of our base cost is gas. We have access to low-cost gas, which continues to give us that advantage over our competitors. Now, not only did ADNOC see the food security global advantage that we offered, it also looked at the significant long-term growth potential in low-carbon ammonia. So for those of you that don't know, one of our products, ammonia, is the most energy-dense non-hydrocarbon media liquid in the world. And that is a great position for low-cost fuels and energy in the future. These slides here, this graph here, shows from 2030 to 2040 at least a 15% CAGR or further in this area as these products are applied as the future marine fuel to power solutions and for hard-to-abate industries like steel, copper, these kind of areas. But that is obviously going into that future, which I've not actually looked at. But what has that support been for this year? Already, immediately, we had a credit rating upgrade to BBB, and we were able to restructure and to remove $20 million of costs from September this year. This is cementing further our low-cost leadership, and those two elements alone giving a 15% EPS accretion. But the most important thing, and I think this is what strictly advantages us over any competitors, is ADNOC saying we will warehouse and incubate growth projects. So during that construction phase, they will incubate whilst these obviously not generating income. And once you get to operation phase, we will acquire them at cost into Fertiglobe. So effectively, when you're in a high growth area, you may have a diminishment of dividend. Not us. Because we actually have that ability with ADNOC to have our cake and eat it, we are able to deploy our dividend to have over 5% yields, whilst also positioning ourselves for this future growth platform, which will only come to our balance sheet and start generating income and therefore going directly to the dividend. So therefore, as investors, you get the growth potential and you get the dividend yield. And we believe there's more to come as well as we develop further on this. Our growth strategy is we basically marked out we will go from a capital markets day from $630 million to $1 billion by 2030. Through three particular platforms. Operational excellence to improve our business. Customer proximity. We bought Australian products, so we have great access close to our markets in Australia in future. And nitrogen product expansion. We are launching DEF, diesel exhaust fluid, in UAE, which will remove NOx emissions, reduce NOx emissions in this country and therefore improve air quality. As of that announcement, we are already 38% deployed. So we're looking forward to continue to go forward and deliver on these. Lastly, I'll leave you with a few key figures. Our dividends growing over 5%. Our 9-month EBITDA is a 48% year-on-year increase over the previous year. We're looking forward to how AI is deploying. Our EBITDA growth of 60% and our EBITDA margin is 48%, sector leading. If you were to try and rebuild our assets now, that would be about $18 billion replacements. We're actually, with our enterprise value of $7 billion, we're at a 60% discount. As we move forward from our position of value to growth, we would love to see you join us and increase your stakes in this journey as we move towards this new energy future. Thank you very much for your time.
Good morning, everyone. Great to be here at the Abu Dhabi Finance Week. Great to see so much attention. Fantastic. Trust that the video gave you already a bit of a good glimpse of our company. Amsteel is the UAE's largest integrated steel and building materials group listed on the Abu Dhabi Stock Exchange. Our scale, our presence across the full value chain, and our strong national backing make us a central pillar of the UAE's industrial sector. Today, Amsteel supports the country's growth and its long-term economic ambition. With 3.5 million tons of steel capacity and 4.5 million tons of cement, we are the backbone supplier to the construction and infrastructure sectors. We hold a leading market share locally and operate 16 advanced plants across the UAE. Our operations also contribute significantly to Abu Dhabi's non-oil manufacturing GDP. Amsteel consistently delivers a resilient financial performance through the global steel industry cycles, supported by our strong market position and the efficient use of both our capacities and capabilities. Over the last 12 months, we generated more than 9 billion EBITDA revenue in dirham and 1.1 billion EBITDA. We have a debt-free balance sheet and a net cash position exceeding 700 million. We are well placed to capture the next phase of growth. Our portfolio covers the full range of essential construction materials, from rebar and wire rod to cement, blocks, and pipes. Our sections and sheet pile products are exported to many countries across the continents, based on our superior quality and low carbon footprint. All these products form the foundation of homes, industries, and critical infrastructure across the country and internationally. More than half of the UAE's buildings contain Amsteel materials. Many of the UAE's most iconic national projects have been built using our steel. From the Museum of the Future to the Baraka nuclear plant, the Louvre Abu Dhabi, and Expo 2020. And also, yes, the Sheikh Zayed National Museum, which was opened last week and was built using our steel. These references demonstrate the trusted quality and reliability of our products. Amsteel is leading the industrial decarbonization in the region with a clear and actionable pathway towards a net zero 2050. We are already delivering pioneering projects in carbon capture, hydrogen-based steelmaking, and process electrification. These investments ensure we remain competitive, sustainable, and aligned with the UAE's net zero pathway. In summary, Amsteel stands today as the UAE's largest integrated steel and building materials company, a core contributor to the nation's industrial strength and economic growth. Looking ahead, we have shaped our growth strategy around Amsteel's core competitive advantages. Our growth today and in the future is supported by the strength of the UAE's economy, especially the continued development of the real estate sector and its expanding population. As we continue to invest in technology, efficiency, and low-carbon innovation, our focus remains clear: to reliably serve the UAE and our international customer base to enable sustainable development and build a stronger future for generations to come. Thank you for your attention.